How's it going? Today is Thursday, the 15th of February, 2024. And I realized that this one hedge I have going, Hedge 2, probably wasn't a great idea. But on top of that, I don't have any other positions in this 64-day window that are making me money. Right now, this is just costing me money. So all these other ones are 92 days, right? Well, I only have two. I have this one that's 92 days and this one that's 92 days. So the problem is, unless there's a really big crash, this hedge is decaying faster than both of these are decaying to make me money. So I'm going to close this one out, this ratio spread. I've got, 26 bucks after fees. It's going to be like 20 bucks profit or something. So I'm going to close this one and then I'm going to sell a put in the 64-day window to offset that hedge. Because right now that hedge is basically hedging nothing because it's in the other expiration. All right, here we go. I'm going to close this one. So ratio spread. Closed out this ratio spread here. And all things considered, only thing that really matters here, because I'm closing it early, after fees, down here in the left corner, $16.13. So what was the fees on that? $7.62 on our 2-to-1 ratio spread. Man, fees add up. That's for damn sure. So I came out ahead 16 bucks after that's all said and done. So let's look at the trade curve. Took that away. So now, the loss to the upside is greater because I took away some credit. And then, if it falls down here, the hedge makes money, whatever. All right. So I need to go into the 64-day window here. I bought this at the money spread here as a hedge. A couple weeks ago or something? It was up here at like 48, right? It's already dropped down to 34, which is crazy. So I need to sell something against that. This hedge 2 long put was 104 and 50. Well, 104 and 47. So can't get half of that. It's way too aggressive. Probably just come down here to like 20. Get at least 20 bucks, which is 100. And then it takes up 600 buying power. So after closing that ratio spread, I'm now up to 1,600 bucks. I'm only using about 10% of my account. So I'm definitely need to get something on here and in this 64-day window. So I guess I'll just start here. This is a 94% pop. If I get 20 bucks, it's gonna be 100 bucks. So, and then come to the curve, it reduces that by 100 bucks, blah, blah, blah. But at least this is in the same expiration. So in theory, this will decay faster than these at the money ones. Anyways, enough rambling. Let's get this sucker filled. Oh, that's at 1975. I want to get at least 20. All right, there we go. I had to switch the strike because it wasn't getting filled at 20 cents. So I got this 46.80, 11 delta, 94% pop, and gives me max profit of 101.25. So that is good to have stuff in the same expiration now, decaying for or against that long put spread. So let's see if I uncheck everything except for the 64 days. Okay, so I just selected the 364-day options here. There's other ones here, but those are free hedges, so I unchecked those. And so this is what the curve looks like. Upside is now 181. It used to be like 280 or whatever. And then now the profit window's down here for max profit, but in theory, this will come down just a little bit. I can maybe get my money back for that stupid hedge and then get out. So, this has got to drop. I'm now in a 111. So instead of a 112, it's just a 111. All right, I totally forget where I was at. I had to run out and get one of my kids from school real quick, but I got this short put into the spreadsheet here, and same old, same old. Sold it for $20, which is $100 in real money, 202 in fees, and then we're here at 11 delta, 94% pop, Ivy rank 19.7. 5103 was where it opened at, and that's it for the spreadsheet. So the short put here and the hedge is now in the same expiration, 64 days, and so they're over here, these three. Check out the curve, and this is what it looks like. At this point, I'm basically hoping to get a little lucky here and have the market drop at least 100 points down to this long put. Frankly, at this point, if I can break even on this thing, I'll be happy. I don't think I'll be doing this again. Just goes to show just when you think you know something, it doesn't work out. So I didn't think for sure anything was going to happen, obviously, but it just seemed like the market is overbought, right? I mean, it's been overbought for a week at least, in my opinion, maybe more. But all of the technical indicators say it's overbought, and everybody and their brother thinks it's going to have a correction of 5% right now. But it just keeps grinding higher. I don't know if we've made a new high today yet, but we are right there at all-time highs. So anyways, it could just keep going like this for weeks or months. I mean, back in, what was it, the COVID rebound, like 2021, after everything kind of steadied out there after a few months, there was a grind higher for months. It was like 6 months, and the market was quote unquote overbought for 3, 4, 6 months, something crazy like that, maybe longer. Basically all of 2021, the market was overbought, if I remember correctly. And yeah, and then it finally peaked out like at the end of 21, and then we rolled over to 22, and then there was finally a big correction. But, everybody and their brother was, again, saying, oh, it's going to crash, market's going to crash, it's going to correct, whatever, blah, blah, blah. So anyways, I might have been super early here. Who knows? Maybe it'll crash tomorrow. But at this rate, like I said, if I can break even, that'd be great. If I could make a little money, even better. But at least now I have this put over here at 46.80 working against this debit. So I have some credit cranking in here. Just keep an eye on this, and I'll just, if it keeps going against me, I'll just keep selling more. And then at some point, I'm just going to have to take my medicine and take a loss on this spread probably. So all that to say, in the future, I'm probably not doing an aggressive at the money hedge like that again. And certainly I got to watch the expirations, make sure, if there is a hedge in that expiration, that I also have shorts working against it, unless it's one of the free hedges. So I feel like I'm forgetting something here because I got totally split up in between opening the trade and then getting everything entered in here, running to school and back real quick. But I guess one last thing here, let's just look at all of the positions together now. Selling that naked put, reduce this, expiration, it's negative 194. I think before it was saying, negative 294 or 300, whatever. So that's about it. In theory, if I come down here, some of these free hedges start kicking in, and if somehow it would close at or expire at 4,800 to 4,680, I'd be making $1,000, but that seems highly unlikely at this point. So, all right, I think that's it. Thanks for tuning in. I'll see you next time.